Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, time to talk markets with Michelle Schneider, managing partner at research and education firm MarketGauge in New Mexico. Hello there, Michelle. Great to see you. All right, so the crypto markets are taking a nosedive. And, just a brief run through the headlines out there. They're blaming everything from a crypto ban, possible crypto ban in Russia, to market fundamentals, tech stock sell-off. But what's your take?
Well, I think all of the above is a factor, obviously, and it had been hovering between 40 and 43, not really being able to kickstart. So the fact that it broke down under support levels following, and also far from the decoupling that people were hoping for following the rest of the market, is not terribly surprising. But like everything right now, people are extreme and people love to get either super bearish. I've seen calls for 19,000 in crypto, or hold on for dear life, if this thing is just going to still go up to 100,000. And the reality of the situation in the broader market and even in crypto is that it's very possible that we are just going to be testing a range-bound type market. We're still establishing what the low of the range is. I thought perhaps 40 would be the low. We're at 38. It's possible we can go to 28, which is where we were in October, and multiple times throughout 2021. Those lows really held, I should say 2021. And so I think that what's happening here now is that the market is really reflecting something that we kind of anticipated, which is sort of a stagnation, a wider range, choppy conditions, and that includes the cryptocurrency.
So, Michelle, of course, you have people who are saying, okay, buy the dip, but is this actually the dip, or do we have further more to dip before you would say, okay, go in and buy?
Well, I have real trouble with trading by an aphorism, buy the dip, because there is more than buying the dip than just knowing that something has dropped. I mean, you want to take the classic example of how horrible buying a dip was. Just look at Cathie Wood's ARK fund. My God, what was the dip there? It's still dipping. So I think you have to really start looking for some other type of technical analysis other than these words, these three words that have become, a hashtag. What I would rather see is, again, if we're going to hold, let's say 38, which has been an area that it has held before, you have to not necessarily become the first person in. You really want to see some level of confirmation. And even if you decide that this is the greatest support level and we can't possibly drop another 10,000, which I think we can, then you have to get out. You have to be kind of nimble. And I think that's really what's going to be the interesting development this year, is what happens to these tremendous numbers of new retail investors who have not just entered the crypto market, but have also entered just the whole relative stock market. Are they going to learn a little bit more about risk reward? They're going to have to, or they're going to wind up being carted out, and that's going to be the end. I'm optimistic, actually, that when you have $25 trillion worth of new accounts that have opened over the last couple of years by retail investors, that just collaboratively and collectively, people will start communicating with, hey, you know what, if crypto breaks 38, we're probably going to go down to 28 or maybe even 30 or 31. And that will give some people an idea that, you can actively trade. We're not paying commissions anymore. So this could be the real general re-education. And these extremists, as I mentioned in the beginning, of, oh my God, we're crashing, or oh my God, we're going to new highs, will temper that to, this is really basically where the market has been historically for years and years and years, and only in the last several years have we seen these massive dips bought up because of a lot of, obviously, Fed policy as well.
Michelle, what are you looking at the alt market? Because right now it looks like everything is kind of crashing together. Do you think that will persist, or do you think we'll finally start to see this decoupling that everyone has been talking about for the past year or so?
Well, if we do see a decoupling, I could tell you that will be like the Wild West all over again, and that would be a lot of fun. But I think if we step back and look at some of the developments that are happening in the crypto space in general, the whole idea of the Web3, the whole idea of the fact that we're going to be going from being controlled on the internet from a few companies to possibly decentralizing the whole space is super exciting, and that's where blockchain comes in. And then also I love the idea of of the Uniswap and the Radium, and the fact that at some point people, right now 12-year-olds are doing it, but at some point it might become easier, particularly people who have some sense of technical analysis, to be able to do these swaps on these coins, basically trade Ethereum for a different type of coin on that particular platform of Uniswap, for example. So I think the future is great in terms of all of that. But right now, you still are in a situation where Bitcoin and Ethereum are the granddaddy and the grandmother, if we want to give them both genders here, and they're ruling even all of the altcoins. I mean, for example, Solana, which was holding up tremendously, obviously fell with the rest of the market today, but you get something like Crypto.com, and that's sort of sitting here at around 40 cents. So you're going to have to judge things individually, but right now, I think the big thing is we're not decoupled. And what's really interesting to me is the big debate between gold and Bitcoin. Gold is actually doing well while crypto has been falling. So there's the new decoupling that we could be looking at.